What do you think has changed so much in just a matter of days?
Yeah, Brian, thanks for having me on. I think you mentioned it earlier, is just really the inflation fears. And that was the biggest thing that gave jitters to the market yesterday. And then the sell-off was obviously significant for that day. And we haven't seen that for a bit. I think going forward, today and tomorrow, the biggest, things that we want to watch for the market. What happens going forward the next couple of days will be telling as far as how the investor sentiment is looking. But I think the biggest thing was looking at the inflation data. It kind of sent jitters slightly through some investors.
Yeah, I mean, it's been a shocking turnaround in 72 hours. We get the producer price index at 8:30 a.m. today, another big reading on inflation. Delano, if that number comes in hot, right now the expectations are the Federal Reserve will not raise interest rates likely before 2023, skipping all of next year. Do you think there's a chance the Fed will have to raise rates well before that?
I think it'll be interesting to tell. I think the Fed is pretty maintained that this is transitory and that we would see things kind of taper off there as far as the inflation and the price increases. And so I think they're going to stick kind of with that mandate. And I feel like if the markets are which is really relied on the Fed and our government to really set the tone a lot of times for the market. That would be the biggest thing as far as investors gaining confidence back into being, more on a long trend again, right? And so I think that's going to be the biggest things for investors. I thought we'd have more defense in the cyclicals, as you mentioned yesterday. There was really nowhere to hide in the markets, and really energy was the only area where you could possibly see some upside. But even if you look at the crypto markets, they were also battered with some different things in tweets. So there wasn't really much area to hide. So I think investors need some sort of confidence, and the Fed has been, able to provide that in the past.
I love investors. I love our audience. And I'm going to take a little shot at them right now. They may not like it at 5:10 in the morning, Delano. Everywhere in our lives we look for discounts. Can you take the price off this? Can I haggle down the price of a car? Can I get this on sale? Everywhere but the stock market. I understand it's painful when there's a lot of red. You look at your portfolio online, you go, oh my gosh, on paper I'm down this. Don't we want these cooling off periods? Don't we want valuations to maybe get tweaked back to more reasonable levels? Don't we want to buy at a discount?
Yeah, Brian, I would actually agree with you. I know you guys had a guest to talk about, that was a boomer term to talk about bubbles, and not saying that we are in some sort of bubble. But, as you mentioned, in March and April, we're up 5.4%, and the S&P was up, around 4%, respectively. So, there's opportunities for investors to say, okay, we've cooled off a little bit. And sometimes that's not always bad, right? They talk about the growth stocks have been flying high. So it's an opportunity for investors to look at different areas where they have the highest conviction. If the valuation has gotten a little bit better, a little bit sweeter, they can take an opportunity to jump in there and be long for the long term.
Shepard Smith here. Thanks for watching CNBC on YouTube.